Good day everyone. Today, the 1st of July 2010, we shall look at the equity market, the FTSE index. This is going to be a medium-term analysis, and we shall be using a weekly as well as a daily bar chart. Now, the first thing I would like to point out is that the index has broken major support at 4927, which is a 38.2% retracement of the March 09 April 2010 rally, and which was slightly broken last May when the index bottomed at 4898. Given that the FTSE has clearly broken this 4927 support this week, we can now focus on the next support area, which is 4367, 4396, and that includes the 61.8% retracement mark and the level at which the drop from the 5331 high recently made in June will be equal to the preceding drop from the 12th April high to the low made at 4898 on the 24th of May. This bearish outlook is also supported by the moving average oscillator, which has already displayed some negative divergence ever since late 2009 and has started sloping steadily downwards even though the market made a high in April 2010. This indicator is now moving down fast but is not yet oversold as it is still above the zero level. Notice also the positive divergence unfolding between late 2008 and early 2009, which in turn announced a great bounce between March 09 and April 2010, and in a similar vein we saw some negative divergence announce a major top, as this indicator peaked in May 2006 and started sloping lower, whereas the market continued rallying to the July 07 top. Another interesting feature of this market is the recent validation of a bearish head and shoulders pattern unfolding since late 2009, as we just broke the neckline at 4847, and on top of that, this neckline is slanting downwards, which is much more bearish than the usual horizontal neckline. The exact same pattern can be seen developing in early 2008, with the market dropping below its diagonal neckline in September, which in turn announced another drop in excess of 25%. The way to establish a target following the validation of a head and shoulders pattern is to take the amplitude between the neckline and its head and to project that distance from where the neckline broke, and in that case that gives us a target of around 4,000. Conversely, this bearish head and shoulders scenario will be invalidated if we break above the right shoulder, which is at 5331. The bottom line is that the FTSE index looks very bearish at this juncture. We just broke through major retracement support, momentum is weak and getting weaker, and we also just validated a very bearish head and shoulders pattern. Consequently, it would come as no surprise if the FTSE lost between 10 and 20% in the coming weeks and months, and bearing that in mind, any sell around the 5,000 level would be an excellent risk-reward trade.